Good morning, everybody. It's Tuesday, July 16th, 5:25 a.m. Central Time. Grain markets are higher this morning. December corn futures up 4 3/4 at 409. November soybeans up 4 1/4 at 1044 1/4. December Chicago wheat up, or I'm sorry, the March is up 4.5 at 582. I gotta get my quotes switched around here. December Kansas City wheat up 3 1/4 at 575.5. December spring wheat up a nickel at 606 1/4. We had some severe weather yesterday. Let's start there.
We sure did. So, severe weather impacted parts of the central U.S. Corn Belt on Monday night. Heavy straight line winds and severe thunderstorms likely damaged crops in parts of Iowa, Illinois, Wisconsin, and Indiana. Winds in excess of 100 miles per hour were noted in some locations. Early morning rain pushed across central Illinois and into central Indiana. Beyond today, the forecast is dry for most of the Corn Belt. Exceptions include Missouri, southern Illinois, southern Indiana, Kentucky, and Tennessee. The next 7 days will see U.S. rainfall confined to the south.
Let's jump back to these heavy straight line winds. I think there were tornadoes. I am absolutely positive that there was crop damage, that there were grain bins damaged. To what extent, I don't have any idea. This just happened, 12 hours ago. So if you guys have details, if you were in one of these neighborhoods where you look at this static shot that we've got on the screen here, this is some nasty stuff. And it went across the entire state of Iowa from north to south, at least in that eastern section, and into Illinois, Wisconsin. There was absolutely some damage. This is one of those things that's kind of along the same lines this year as the flooding event in the Western Corn Belt, as the hail in Nebraska. We can't quantify what was lost. I don't know that anybody can quantify what was lost in terms of bushels that were in the field or even bushels that were in the bin. And maybe at some point in time, the marketplace or USDA or whoever recognizes this, and maybe it's large enough to make an impact on the marketplace. But for now, it's not. I know there was damage. How much was there? I have no idea. Past weather data is tricky to come by. So I know this is just a static screenshot, and you can go back and look at the radar, and this thing moved for hours. Across these parts of Iowa and into Illinois, and you've still got some remnants of it this morning. But nasty, nasty stuff. Drop me some comments if you guys were in those locations.
U.S. corn conditions were unchanged last week. The crop was rated 68% good to excellent nationally as of Sunday, steady with the prior week. The rating was slightly lower than the trade expectation of 69%, but was the best for the week since 2020. The majority of the states across the Corn Belt saw conditions either deteriorate or remain unchanged, with the exception of Illinois. The crop is 41% silking nationally versus 24% last week and 32% on average. U.S. soybean conditions were reported at 68% good to excellent, unchanged from the previous week and the best for the week since 2020. The crop is 51% blooming versus 34% last week and 44% on average.
You mentioned Illinois. The Illinois corn condition good to excellent jumped to 73% good to excellent from 67, and that's following those rains we saw last week that were associated with the hurricane. We did not see an improvement in Indiana. I figured maybe we would. Missouri was unchanged. Ohio actually declined. So grand scheme of things here, I thought maybe you'd see some bigger improvements for Indiana in particular, or an improvement at all. But grand scheme of things, 68% good to excellent this time of year is a very good rating. And this is going to lead traders to believe, right or wrong, that you've got potential for a trend or better national corn yield. Same thing for soybeans. We're above average at 68% good to excellent. They're really strong ratings. And I understand that the crop ratings are not gospel. I believe personally these ratings are hugely flawed, and I think can be extremely flawed in a wet year like this. But for the moment, the crop conditions are a bearish input, I guess. What about wheat?
So winter wheat harvest is ahead of schedule. The crop was 71% harvested nationally through Sunday versus 63% the prior week and 62% on average. The trade had expected harvest to be 74% complete. The U.S. spring wheat crop was rated 77% good to excellent nationally compared to 75% last week. Declines were noted in Minnesota, South Dakota, and Washington. Improvements were noted in Idaho, North Dakota, and Montana.
The wheat market is an absolute dumpster fire, and a spring wheat rating of 77% good to excellent is not going to help matters by any stretch.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
You're a corn and soybean grower in the United States, and you are always on the hunt for information. Farmers spend a lot of time seeking information. You're on the internet, you're on social media. You might find some weather maps or some charts, but you're not finding exactly what you're looking for. We have what you're looking for. We have long form videos with graphics and spreadsheet downloads and all sorts of stuff that can help you navigate the markets, grain marketing, crop insurance, policy, biofuels, all of those things. Yesterday's video with Chris Barron was especially good. He had a spreadsheet that he made available for download, which was a fall indemnity calculator for crop insurance purposes. We talked about the red ink on the balance sheets that a lot of you guys are seeing on your own operation and some of the silver linings. What are the silver linings? Maybe the crop insurance situation. Maybe you're going to be able to yield your way out of this thing. We understand the situation is bad, but it shouldn't be ignored. And you've got to pay attention to what's going on, as ugly as it is. I would highly suggest that you check this deal out, guys. Whenever we see questions or issues pop up on social media, as an example, it's always stuff we covered 2 or 3 weeks ago. So if you're not tuned into what we're doing, I think you should check it out. To give this deal a shot for $50 a month, cancel at any time, is absolutely worth your time. I think you should try it for a month at the very least. Go to standardgrain.com, sign up this morning. I will forward you a copy of this morning's email, which includes all of our headline stuff, a bunch of graphics, our 6 most recent premium videos, Chris's downloads from yesterday. Give that deal a shot this morning, guys.
The National Oilseed Processors Association released June crush data yesterday. The U.S. soybean crush declined last month when NOPA members processed 175.6 million bushels. The crop was down the crush was down 4.4% from May and fell below the average trade estimate of 177.9 million bushels. Despite the decline, the soy crush in June was still the largest on record for the month and surpassed the June 2023 crush by 6.4%. End of month soybean oil stocks in June declined to 1.6 billion pounds. Stocks fell below the average trade estimate of 1.7 billion pounds and were down 5.9% from the end of May and down 4% from year ago stocks.
The trade missed this by a couple million bushels. It's not a big deal. We are still going to crush a record amount of soybeans in the United States this year and in all likelihood next year. Even with this slightly weaker number, we should still be on track to meet or perhaps even exceed USDA's crush target for this current marketing year, which ends here in 5 or 6 weeks. So I don't read this as being a negative. It's just they missed by a couple million, I guess.
China's economy is continuing to falter. During the second quarter, China's GDP expanded by 4.7%, its slowest pace in 5 quarters. The downturn is largely due to poor consumer spending. Also, during the second quarter, China hit its 5th period of deflation. Chinese President Xi Jinping has focused on the expansion of manufacturing and high-tech industries to strengthen the country's economy. However, that plan might backfire given the likelihood of Donald Trump winning the election and imposing tariffs on China.
The growth is still growth. It's still positive. They're still printing positive GDP numbers, not as good as expected. A lot of people may argue that Chinese economic data is fake, and I wouldn't totally disagree with you if that was your argument. When it comes to corn and soybean imports, this is our concern, right? USDA official, the WASDE board, is projecting that China next year will import a record amount of soybeans, 109 million metric tons, and a pretty substantial amount of corn relative to what they've done historically, 23 million, which would be a tie for the second most ever on record behind the 2021 marketing year. Now, USDA has this office in Beijing, and they are not as optimistic about Chinese imports. They've got the Chinese soybean import number for new crop at 103 versus the World Board's 109, and they've got the corn number at 20 million versus the World Board's 23. So even within USDA, there are some entities and people out there who are not so optimistic with regard to Chinese corn and soybean imports. I mean, they're still big, but I don't know. We'll see how bad the economic problems are. They haven't bought much of anything for new crop out of the United States, at least to this point.
U.S. corn shipments were strong last week. USDA reported that 42 million bushels of corn were inspected for export during the week ending July 11th. The print was up 5.4% from the previous week and up a whopping 157% compared to the same week last year. Soybean shipments fell below pre-report expectations at 6 million bushels. The print was down 43% compared to the prior week, but up 4.8% versus the same week last year. Wheat shipments exceeded pre-report expectations at 20 million bushels. The print was up 55% from the previous week and up 95% versus the same week last year.
Corn number was pretty good, and I would say it's contra-seasonally good. And in order to hit that USDA target that they bumped up on Friday, you're going to need to see a little bit more of that, some stuff closer to 1 million for the remainder of the marketing year. I'm not overly concerned about old crop. That's a good wheat number too. New crop, export business and sales, the pace there and the poor pace there is probably the big concern now when it comes to exports. What did cattle do yesterday?
Cattle futures were narrowly mixed yesterday. Feeders were 12 cents higher to 92 cents higher. Live cattle were 27 cents lower to 70 cents higher. Box beef was also mixed. Choice end of the day at 321.49. That was down 57 cents. And select end of the day at 304.82. That was up 251.
Outside markets this morning, U.S. dollars about flat. Stocks are up just a little bit. Bonds are up. Gold's up $16. Crude oil is down 81 cents in the August WTI at 81.11 last trade. Have a good day, guys. We'll talk to you on